Hi guys, and welcome to the technical analysis wrap on Friday the 21st of February. So boy, we've had some really big moves since the webinar on Wednesday night. I know a lot of the pairs started to move during the webinar and just before it, but they've continued on with the job. So a lot of the setups that we were talking about have certainly started to play out. So let's jump straight into the charts. So here we've got the Aussie on the daily chart. I like to always start on the daily one because it gives us the best view for the recent price action of this week. And you can see we've got this massive bear candle that broke that support good and proper over the last couple of days. Now we had some negative fundamental news, obviously, that's caused this. This is obviously a nearly 100 pip candle, so it certainly gave us some excitement yesterday. But it's continued on with the job today and shorted off a little bit more. It's broken down below the 66 cent mark for the first time in a very, very long time. In fact, we have to go out to a monthly to see the last time it's actually been this low, and that was way back in September of 2008. So that is like a serious drop. And the amazing thing is, there's nothing really to catch it until almost, the 63.50 area where really that's probably the next part we're going to find any form of substantial support. So it doesn't mean that you just jump in and continue on with this. What you want to be looking for now is a reasonable pullback to ideally this 66.80 area. That would be an ideal technical pullback. It would obviously be a roll reversal zone. And by then the 20 would have caught up the moving average EMA, and that would make a nice crossover of resistance, potentially short to maybe send it down even lower. That would be the ideal scenario. I wouldn't be looking at longing this one unless we had a substantial change of trend, and by substantial it would have to be a series of higher highs and higher lows on the 4-hour chart at the very least. So definitely only shorting opportunities on this one until we get some evidence to the contrary, but a pullback is required before we get too excited about going any shorter on this one. Okay, we'll move on to the USD Swissy now. This has had a really good couple of days as well. It's had a great week. We were talking about the double bottom setup last week, and we can see here that it's certainly broken through the neckline, pushed up above these moving averages, which is what we needed it to do last week. And the last 5 days, all of the trading days this week have been in a very good and positive direction. So good to see this one doing the job. Now, obviously, it's run into a pretty significant roll reversal zone here. There's a fair bit of resistance in front of it, including the 200 SMA on the daily chart. So certainly not a mucking around sort of area. It's going to take a fair bit of breaking to get past this zone. We can see that the stochastic is obviously in the oversold. MACD is still rising, but it's just one to watch. I would probably be looking for potential shorting opportunities, probably to the pullback of the MAs, and then maybe send it long and try and break this zone once and for all. But we're going to need evidence now, if you haven't already taken the longs, that it needs to break this zone good and properly with a close above the 200 and this roll reversal area before I get serious about going long on this one, with the obvious take profit zones at the next serious resistance zone, which will be around that sort of 99 or even parity, which is obviously a very serious zone for it. That's the next target though, if it does break past this little area here. So ideally, pull back to the MAs and then up and all the way to parity. The US dollar yen has also played the game in a very big way. It's had a lot of pent-up anger. You can see here, we've been talking about it for a while. We've had a series of higher highs and higher lows. It certainly hasn't gone into a short trend in a very long time. We did mention that last week. And finally, this little bit of pent-up contraction in the market has sent it spiraling up. That blue sky, and I've said it over and over again, that when we've got a blue sky area with not much in front of it, you're going to get a big explosive move, and there it is for us straight into the 112, which is pretty much where every take profit should have been. It's not to say that it can't go higher, of course, but that's the first place that it's obviously going to find some serious resistance. It's got up there very, very easily. I would be surprised if it continues on without some sort of a pullback from this level, but in saying that, doesn't mean there are no rules. It's just it would be ideal to see maybe a 38.2 pullback of that move, which would be around this area here. The MAs need a bit of a chance to catch up. You can see that they've been completely left behind with the explosiveness of this move. So we probably just want to see a little bit of consolidation in this area, maybe a bit of a pullback, maybe to the 111.50 to 111.20 area, which would be ideal, and then potentially break this zone up and push all the way into the 114s. But a really, really good trade, and hopefully a lot of people got into that one because it was a very nice setup. Okay, the S&P 500, the index we always like to look at. Okay, we've had a little bit of weakness over the last couple of days. Last couple of trading days have been a little bit weak. Again, nothing is convincing me to go long or short on this one. We haven't got enough evidence on either end. I don't like trying to pick the top of a market. And realistically, I wouldn't want to be going along on this one unless it closes considerably higher. But to me, it hasn't really had a pullback that really warrants an entry yet. So we want to be seeing a pullback to probably at least the the 3200 area, maybe 3220. A nice little pullback to there would be probably ideal, and then maybe try to look for a reversal of a trend on a smaller time frame to send it up again and potentially test these highs again. But I'll wait and see on this one. Wouldn't be longing or shorting at this point because there's just not enough evidence to really give you a definitive direction. Okay, gold is the next one we're going to look at. Again, this has just been one of those beautiful trades. It's been a technical perfection for us this year. This one has been basically testing the 20 and the middle Bollinger Band, which is also a 20 SMA, and you can see the 20 EMA in the red here. It was basically bouncing off that. It was promising to do this. It has been promising to get to the 1600 for a little while now, and when it did, it certainly did it in a big way. It's even as we speak, it's pushing up to new highs. Where this is going, I mean, look, with a little bit more momentum, I mean, it could push into the 1700s without any drama whatsoever. I mean, its next serious point of resistance, I mean, we're going to have to go out to a monthly to really find it. So it's already broken past all the things we're looking for. So up around this 1770 area is probably the next place it's going to find any real serious resistance. So yeah, one to watch. I wouldn't mind seeing it come back and potentially testing the 1600 to the 1590 area for a potential entry if you're not in it already. So you want to see a bit of a pullback, but you can see it's pushed right away from the moving averages now on the monthly as well. It's been pretty strong for quite a while, but we want to see a pullback to around this zone, just this area here at the very least, about the 1590 to 1600, and then that will potentially give us another entry level to get long and hopefully push into the 1700s. But it's been a fantastic trade, and hopefully a lot of people have got involved in that one. Okay, the dollar index is the next one we will look at. This is again telling the story of what the currency pairs have been doing. The US dollar based pairs have been very, very strong, and the dollar index is obviously replicating exactly what they have done. It is very unusual to see a move this long and sustained without any pullback whatsoever on the dollar index. You can see in even in the most recent history that we haven't had a move anywhere near this big without a pullback. That inverse head and shoulders certainly started it, and it hasn't really, if you weren't involved from that move, it's given you very little area to actually re-enter on this one. It's just been one of those ones that's exploded up and been a difficult one to get a hold of if you haven't traded the pattern from the bottom. But again, this is at an area, it's broken a very serious level of resistance here, as you can see, which is the 90 to 99 level. It's pushing well into the 99s now, tested the 99.50. I would like to see a pullback to the probably 98.90 to 99 level. That would be ideal, even though it's a shallow pullback. When you get a big extensive move like this, the pullbacks are often not going to be as big and deep as you would like. So probably, that would probably make it a 23.6 of a fib. I would imagine. So that with a crossover of the roll reversal area could give us a reason to get in. But again, smaller time frame change of trend, and probably jump on board with that one if it comes back. But if you're not in already, it's a difficult one to get long on until it does get that pullback. You really want to see the market behaving itself and coming back and giving you a chance. It's been a very, very big move, and it's difficult to see it going much past this without pulling back at a reasonable level. Okay, we will go on to the euro now. So the euro has just continually pushed lower and lower and lower, similar to the Aussie dollar, but probably a little bit less aggressive. Like, this is a daily chart as well. So you can see just the days have just been continually weak. We've had a little bit of strength on that one. We're sitting around that 107, sort of a 90 to 108 level. We need to go out a fair way to actually find some support at this level. You can see here, this point here was a bit of it can certainly give it a bit of support. It'll be a roll reversal area. It was resistance at this point here, these 2 points. So we would expect that it will find a little bit of support here. MACD is definitely oversold. We can see here on the stochastic that's also oversold. MACD's trying to, it's gone into the histogram again, and it's pretty flat. I mean, it could get into the 0 zone pretty easily. So it wouldn't surprise me, to see this turn around and probably test these levels that are around the 109 again. So probably 100 pips from here. I'd like to see it bounce up and probably test the previous support zone for potential shorting opportunities. It's going to take a little bit of convincing to see this one going long any further than that. So I'd be probably looking for shorting opportunities on a smaller time frame at around this level, and then potentially going long on it if it does get above this level here, which is the 109, and close above it, and give us something to get excited about. So it needs to break the 110, and then obviously the next level will be the 112. That's hard to see at the moment. So for now, we'll be looking and setting our line, probably setting alerts for this level here. We want to come and see it test the 109 and potentially look for shorting opportunities. It'll be testing the 20 moving average as another resistance level at that point as well. So hopefully we'll get that crossover resistance. But you can see here that the stochastics is drastically oversold on this one, so wouldn't surprise me to see a bit of a bounce up. Okay, the last one we will look at today is the oil. So oil has really played the game as well. It's been technically a really good trade over the last few weeks. I'll just blow this one up. The double bottom has played out quite nicely. It's broken the neckline, shot up. We got this serious candle here that's telling us that basically Dragonfly Doji telling us that the price action completely reversed. The sellers certainly tried to kick this one in, but the buyers won the war in the end, pushed it up with a really strong closing candle above the 20 MA. This is a daily chart, so it's a pretty serious candle. Pretty much hit all the levels that we expected it to hit. You can see the support line that was through here. I'll just draw a vertical line there to point that out. So we can see that was obviously a very strong support line for quite some time. We would see no surprises to see that this is going to be resistance now. We've had a pretty reasonable candle that's tried to push up to the 50 here. It's rejected, so it's a pretty big daily rejection, as we can see, nearly close on $1. So it's a pretty decent rejection. That's almost now a gravestone doji. Well, it pretty much is really. It's like we can call it a gravestone doji, close enough. But the most important thing there is obviously that the price is justifying what we already saw. So what we're looking for now is probably a pullback to around this level here. Not dissimilar to what we saw on gold. We want to see a bit of a pullback back to maybe the 52.50 to give us an opportunity to potentially go long. I'm not convinced this is done on the long side yet, but difficult to get involved with until it pulls back to a support zone, change of trend, and we want to see a closed candle above this level here, above the 53.70, and that'll convince us that it's on its trajectory long again and potentially pushing up into the 58s and 57.50s. So I hope everybody has had an awesome week trading. We've had some really, really good opportunities. If you've missed any of them, just take a look at some of the setups that we've seen, wait for those pullbacks, and hopefully you'll get a chance to take part in the ongoing trend. Have a great weekend, guys.